Good morning and welcome to Market of the Moment. As usual, I need like a 35-second timer to be able to get my settings done on my. Oh wait, we're not even. Oh wait, it says there's an error, but it also says we're live. Let me double check and see if we are showing up on Facebook because
hopefully we are.
Yeah, I know, right? Because this is really probably going to be the second best part of the show here. So, oh, look at there we are. We're on Facebook, so we're good.
Nice.
So, all right. Well, glad we got that all worked out. So, good morning, Don Chakowski, Director of Channel Sales with Fidelity National Title. Welcome to Market of the Moment. Hopefully, you're rejoining us for this week's edition. We have Mr. Dave Zajdzinski joining us from eXp Realty today, and we're excited to revisit Dave. We've been trying to make sure we are once a quarter. We're barely squeaking in on the very last day of the quarter for updates with Dave on his progress for his 2021 goals. So we're really excited to hear about those. So if you watched last week, I apologize for all the chaos and fun that they were having at my expense for the most part. But no, I really do want to thank everybody that was on last week, and they did a great job. So thank you, team, for everything you guys did. This week we have our regular crew back. So Ms. Amber Kavart from Guild Mortgage is back. Good morning, Amber.
Good morning. Thanks for having me. Great to be back.
And I think you're actually dipping out on us again next week, right?
I am. Little fall break trip.
All right. Well, good for you. So glad you get to have a good time. So, and thank you for being here this morning. And Miss Mindy Jones, the owner and operator of the Amy Jones Group. Good morning, Mindy.
Good morning. And if you haven't watched last week's episode, you definitely should go back and watch it. You might learn a couple of things about our friend Don. And hopefully you will see me playing the neutral third party because I wanted to make sure that I would be invited back today.
Yeah, well, we'll see. So, I haven't watched the entirety of last week. So now, maybe you won't be here next week. Actually, Mindy's not. See, I did that because I know Mindy's not going to be here next week. But
she was really tame compared to everyone else.
Oh, yeah.
I did my best to keep it together.
Yeah, Jen Weller might not be back on. She prepared slides and all kinds of things. But Mindy, thank you as always. We appreciate the market update, and we're looking forward to hearing what we've got going on out there. So, thank you. And then Ms. Sharon Terhune, the sales manager for the Vice President of Sales for Fidelity National. Yeah, I'm like all the titles. I'm like just, But good morning, Sharon, and welcome back.
Yeah, good morning, everyone. Happy Thursday.
And we've actually been missing Sharon for the last couple of weeks because Sharon was out doing some kind of, is that the dances there? Yeah.
So, I got my hula dance down for sure. I won't really demo it for you, but yeah.
So, but thank you as always, Sharon, and we're happy to have you back.
Great to be here.
So, and Mr. Dave Zajdzinski, thank you, sir. So if you haven't been watching some of the previous episodes with Dave, we started out 2021 with Dave talking about goal setting, and Dave was kind enough to share with us what his goals were for 2021. And then we committed to having a quarterly revisit and accountability meeting of sorts for our good friend Dave on tracking on where he is on those goals. And I think when we talk about goals, one of the most important things that we always need to keep in mind is the importance of being able to pivot when necessary, right? Because as we learned from 2020, what we have in mind isn't always what the world has in mind for us. So the ability to pivot and make the changes is necessary. So we're going to be able to explore that with Dave as well if they've had to do any of that. So Dave, if you don't mind, kind of sharing with us what your goals were for this year and how we're doing.
Yeah, well, thanks again for having me on. It's great to be held accountable. It's fun to be held accountable to something you want to be held accountable, right? And I think, Mindy, Amber, like any of us that lead people, it's hard to hold people accountable to something they don't want to do. So this is something we wanted to do. I thought we really could hit these goals. So thank you for that. But our goals for this year, I'm going to look at this slide. It was 140 units and 44.3 million in volume. So that's what we had set out. And yeah, we've had some adversity this year. So we'll talk about that. But can you see my screen? Do you want me to share?
Yeah, let me bring it up here for everybody. There we go.
There we go. Okay. So orange is really good. Yellow is good. Blue is not great, but I'll show you where we're at. So starting on the left, we should be at 33 million closed. So we're at 40.7 million. So I don't know why that's not orange, maybe because we haven't hit our goal yet, but we are about $7 million above our goal. So we're going to hit that for sure. We should be at 104.72 closings and we're only at 102. So had we done this tomorrow, we'd be beating our goal. So bad timing, right? With when escrows are going to close. So I'm going to say we're there.
Yeah. Well, they probably already closed about 3 or 4 for you already today. So
I think we've got like 4 closing today with Fidelity. Yeah. So, so yeah, so we're going to hit that. 44.3 was our goal. We're with what is in escrow. We're at 46.1 and 115. So we have 13 more pending for 5.33 million. So we're definitely going to hit our goals. To hit our volume goal of 140, we've got a short window to get, 25 solid escrows, which it's doable. It's doable. So we're all aware of that. We're pacing for it. And it's really nice to have a scoreboard like this where we know what do we have to do? Like it's, we were talking about football before. It's knowing how much time is left in the game and how much we're down by. And we've got a game plan for it. So we feel pretty confident that we're going to be able to hit these numbers. But I'm super thankful the team is going to blow by the volume number because that's ultimately what we're after is GCI and volume. And so we're really happy. We're pleased to say that we're going to hit those goals. So I appreciate you guys holding me accountable. And
Fantastic, Dave. This is so awesome. And what a great system you track this into, the SISU. I mean, this is so easy to look at and really know exactly where you're at. It's fantastic.
Yeah,
speaking of this screenshot, Dave, would you mind just scrolling down a little bit and can you just talk about what that conversion cycle looks like for you? I think that would be really helpful for people as they're heading into their goal planning for next year. I know everyone's going to do it a little bit differently, but we do the same kind of concept, which is, you back into the number of conversations that you need and then maybe give people for you what the definition of a conversation is.
Yeah. So we track conversations. We have to track manually. So the great thing about SISU is if you have the right CRM, it's streamlined and they communicate. So we just have to put on a tag that we met with somebody and it'll import all their data over. So best tracking software in my opinion. So it automates that. Now conversations, the agents have to go in there and hit the record button and say, okay, this is what I did today. But for these numbers, we know, how many appointments we set, how many of those do we actually meet with? So we met with 83.6% of our appointments, and then we signed 34% of those into clients, and then we got 73% of those under contract. Now this says we got 106% of them closed, so obviously there's a little accounting error there, but we know we didn't get that many in. But those are the numbers that we're looking at, and then we can go on the individual side and see, okay, how are you stacking up as an individual compared to the team, and then where do you need to move those numbers? And you can have really good, meaningful conversations when you're trying to help somebody in their accountability. So experienced agents on my team, we were able to look at this cycle and they both had 2 very different struggles in their conversion. And you wouldn't even know it, right? Without recording all this, how do you even know? And what was great was my best converter, her struggle was selling a lot of houses, being busy, and just assuming the client was going to show up. just like assuming. And we were able to really track down just some simple things to just send reminders, like a doctor's office. I'm like, if we've got to put a system in place, so I have a site that you can put people in, and it'll send out reminders like, hey, Dave's looking forward to meeting you on Monday. Look forward to seeing you on Monday, and just hit them and hit them and hit them to let them know.
Is that part of your CRM, Dave?
Yeah.
Does your CRM like does all the reminders? Do you mind sharing with what CRM you're using?
So we use Sierra Interactive.
Okay.
It's a smaller one, but I tell you, it's been a game changer for us. So Sierra Interactive, we got off Commissions Inc. and moved there. Part of a mastermind I'm with very big teams across the country. A lot of them would switch to Sierra, and we've had great success with that, and a lot of the automation. And so just having the agents be aware that people aren't going to show up. And, when we set an appointment on Tuesday for Friday, and I get it. Agents are like, I'm so busy. I'm doing all this, and you want me to text people on Sunday? Like, well, that's what needed to move the needle in that agent's business. And once we did that, we saw a spike in their conversion. And then we can obviously see when it is in either converting clients or converting, getting contracts under. Right now we can track, like, it's taken you too many times to write to get this person in the contract. So we just need to look at how are you writing your offers, and then who has a higher rate. Can you share? So then in our meetings, we can share who's killing it on getting offers accepted. What are you doing? Right. And it's like, well, I'm using Amber, and we're doing the appraisal gap waiver. Okay. Is everybody doing that? No, I'm not doing it. Okay. Well, let's get your contracts up, because everything else in the funnel looks good. So on the individual side, it's a fantastic tool to be able to look at. I don't look at it as much on the team side as much as the individual once we have that baseline.
Yeah, I think that being able to see this is one of the most important things you can do for your business. Being able to look at where you're at and to know that, and we always spend a lot of time in our fourth quarters talking about goal setting. But when we're looking at the goals, it's good that we're able to compare to where we're at, what we need to do, and then what you've got here where it's showing, the number of conversations, and you're able to track those through a system, and you're able to, okay, look at, you're not having enough conversations with people. I think that it's really important and is able to have effective coaching. It's good to have facts. And so, I wanted to touch on, Dave, you mentioned about the reaching out and the messaging, and reminders and all that stuff. And, it's funny because a lot of people, including myself, when we don't do well in those areas, we're like, well, I'm so busy. But so are the people you're meeting with. And, and so, which is how things get forgotten and dropped and all that stuff. So if we say, this needs to be a priority to me, because if I want to stay busy, I have to, I need to make sure I'm doing my follow-up pieces. And, but having systems around that is super important as well.
Yeah. So we're really trying to make it easy. I think the progression I'm seeing with teams that I'm masterminding, what I want to see and what we're doing is really just have the agent stay in a very small lane, taking the follow-up out of their hands with the ISA, automating as much as we can. So one of the things we've implemented in Sierra is a pre-recorded series of follow-up. So if I'm talking to Mindy and she's like, we really need 6 weeks, just don't reach out for 6 weeks. Is this what's going on? We hedge our bet a little bit. We might go, if someone tells us 3 months, we'll go 2 months, but it's all pre-recorded in the agent's voice that says, hey there, this is Dave. We chatted. You wanted me to follow up with you in about a month, and I'm just reaching back out. Obviously, things can change. Did you still want to connect? And it will leave voicemails and text messages. So when somebody says, call me in 2 months, I don't even want the agents to have to call in 2 months. Why do that? Just have it, drop a voicemail, send out a text message, and it'll just stay on that client until they respond. And I really think that's the way it needs to move. If you want success with the agents, is have a system that makes it very, very easy for them to follow up. Call me in 2 months, just click a button instead of actually calling in 2 months. So that's one of the big changes that we've had in Sierra. And so, one of the things we talked about is the showing partner.
Right.
And so I want to show you what happened when we got the right showing partner with the right agent. So I'm going to share Dorothy's numbers. Dorothy closed, I think, 30. Let's go to last year. Very good agent. She closed 34 homes last year. If we come to this year, she's already closed 45 with 5 pending.
Wow.
And her showing partner, we had some hiccups. We found the right one in June. So if you look at her business, look what happened in June. Her under contract just exploded. You know, she put 9 under contract in August, and then look at her closings. So her volume just exploded. Look at her commission, and she had some adversity. Dorothy lost her 21-year-old son in August, and still was able to maintain business by having that leverage, by having a very, very good showing partner who is just kicking butt. That without that piece of our business, I don't know what it would look like.
So how did you? Sorry.
Go ahead, Mindy, please.
How did you change? Because I know when we talked to the first time, sort of what your expectation for that showing partner would look like. And then when we talked the second time, you had kind of modified a little bit based on the fact that that first, person wasn't the right fit, or the model wasn't the right fit. Now it sounds like it's a one-to-one relationship with Dorothy. Can you talk about how you've changed the role over time based on where you're seeing the most success?
Yeah. So I still believe in the one-on-one role. So we do want it to be a partnership. It really was just finding the right fit. It was more of that, but not really tweaking the role itself. I still think, and there's different iterations out there. I'm just convinced on this one where you have a true partnership, and have as many agents that are able to do it run on that platform. So keeping that a partnership is the right way. I've seen, I just got back from Fargo where I took this from, and seeing how they run it in multiple teams up there. Everybody's had struggles when it's been different than just that one-on-one relationship. It really, I talked to an agent yesterday and it was like, oh, well, I can pay this person from time to time, or I'll give them a little bit of commission. It just changes when this is your partner and you enter into that day and week of prospecting knowing I have my partner who is going to handle all of this. It really gives you the freedom to be aggressive in your prospecting because you're not worried about the constraints of, well, what if I can't show? And if it's just here or there, I don't think it ever really takes off. So
can you reiterate? Sorry, can you reiterate them for the people who maybe haven't seen the first couple of touch points with you, what that looks like?
Yeah, so the showing partner, the best way for me to describe it, it's like an internship. It is a licensed realtor coming in on a salary, on a W-2 contract, and ideally should be 12 months to 24 months, where they are getting an intense training on how to be a realtor, what to do, and how to survive. And so we pay them $36,000 a year on a base salary, and then they have opportunities to earn commissions, which we expect. So our contract, we expect them to sell 8 houses in the first 12 months that come out of their own sphere, out of open houses, out of something where we are not the ones feeding them. We know how to feed agents, so we're trying to get people to see who can survive in real estate. And really, it's a great way to not go broke when you get into real estate. Run with somebody like Dorothy and a team to see that, 50, I'm hoping she can get to 60, 70 sales this year and see what that volume looks like. And then if they do that for the year or two, instead of going very, very wide in your agent count, go deep and narrow, build under your best agents. And then when they prove that they can do that, then move them lateral and bring in their replacement. But what we did this year is we essentially got rid of one agent who did about 22 transactions last year. And we're going to grow with the same agent count or less because we're pushing more transactions through our better converters. And those, I think all but 2 of those transactions were company provided. So if they're company provided, then we can start to delegate where those can go and then create more of a standard of how to bring in transactions. I think as a team leader, we're not doing anybody a service by come into real estate and don't talk to your sphere. Don't learn how to be an influencer in your community or in your schools, right? So we are really, I think, building a better agent by having them go through that contract.
Dave, what does that handoff or that like conversation look like as the agent is introducing the showing partner and how that relationship works? How do they talk to the client about that?
Yeah, it's a really good conversation and it's well received. And I think there was some hesitancy even when I looked at it. We talk about, we'll bring up just different industries, you know, say, okay, when you go to the dentist or when you go to the doctor's office, we really like to put the agent in that doctor seat and say, this is your specialist, this is your negotiator, this is somebody who's got 12 years of experience, has sold 400 houses, they're going to take care of your negotiations. What they don't do, and this is who this person is, this is your tour guide, your boots on the ground, they're going to be the ones that get you into that home right away. Because we know in this market, if we can't get you into a home right away, you're going to miss out. So we're going to give you 2 full-time realtors to take care of you, but we're going to stay in our specific roles. One's going to be at the house for you and scheduling that. And then you're always going to have your expert negotiator handling the details. And always well received. We've had a few people say, well, how much more do you guys charge for this? Right? And nobody has had any pushback. And it works. It works really, really well. It is, I believe, the perfect model for real estate is to come into real estate that way. And the ecosystems that run this, having seen, you know, the Hatch team in Fargo run this for about 5 years, all of the people that starting as showing partners, they're all selling 70 to 150 homes a year regularly. They just have a different mindset and that bar has been raised so much higher where they understand what's possible. And they really learned how to prospect really well.
I think it lets them,
such a great model.
Yeah, I think it lets them keep prospecting, which you were saying, because otherwise you're on that roller coaster ride forever where you are prospecting and you get deals and then you're busy and you're showing homes and you're not prospecting and then you close those and you're just up and down all the time. So if you can just stay consistent with prospecting because you have leverage in your business, then you can continue that growth. So I think that's what's like so powerful about this role.
It is. And when I look at Linda's numbers, we can see when she had a showing partner and when we got rid of hers. Right now we're on the replacement for her. So, you know, even a bad showing partner still gives you a lot of leverage, right? And so I think it's one of the positions where even if you make a mistake, because we've all made bad hires, it doesn't bite you as much as other bad hires, because that leverage of you're going to show Amber a house tomorrow at noon still works. And here's the other thing that if you're a team leader, Eric broke it down. He's lost about $2 million of GCI. He showed his personal production when he got out of it, and had he stayed in there, so it allows rainmakers and team leaders to stay in production without doing the work. So you can now have your client, you know, we're basically, as team leaders, start to train our past clients. Don't come to me with your real estate needs. Go to this agent, go to this agent, go to this agent, because we're just telling them, I'm not going to help you. If we tell them we're still going to help you just in this manner, I have personally done it now once we started it, and all of our clients are thankful for it, and not one word of, well, I can't believe you weren't out at that house. So people understand it. People understand how that works in so many different industries, yet we have been outsourcing our relationships to our agents, when I question that now. Keep more of that and build leverage and keep, you know, the only lawsuits I potentially have been from newer agents, not my more experienced agents, right? And so it's a win-win if we can get agents to come in like this. They're not starving for commission right away. They learn, and more of the productivity is pushed through an agent like Dorothy. I think it's such a win-win.
Dave,
so what does that schedule? Oh, sorry, go ahead.
That's okay. Mindy, go ahead. I'll ask after you're done. Go ahead.
What does that schedule look like for that person? Then you said they're a W-2 employee, and then you've also referenced kind of a coaching mindset with them. So is there certain requirements around prospecting, availability for their agent, but then there's also coaching time? Like, what does that look like?
Yeah. So it's 90 minutes a day of prospecting, 5 days a week. That's going to be tracked in Sisu. And then we can have conversations on how's your appointment to contact ratios, and make sure we're monitoring that. Then there's training, for those first, we say training doesn't end until it's ready. Like you could be ready in a month. It could take you 3 months. So training's not finished until you're ready. So there's in-office training on, we go through modules of how to be an agent. I think we have 16 modules that are video based, and then how to lead convert, how to work with your sphere. So they're going to go through that training, and then they need to hold 48 open houses for the year. So actually getting out there, doing open houses, and so it needs to be our philosophy is watch me, I'll watch you, then you go and do, and we'll watch that. And have them go out and sit open houses with agents that know how to do open houses. So there's shadowing, and there's the constant role playing, but they're forced into those activities that a successful agent needs to do. If we grabbed any agent in the Valley and we're like, you know what, you're going to do 48 open houses this year, watch what would happen to their business, right? Or if we said you are going to do 90 minutes of prospecting 5 days a week, watch what would happen to their business. So we are forcing them into that mold of what a successful agent looks like, and then holding them accountable and saying your paycheck is dependent on it if you don't do it. And that's how we were able to let go our showing partners. It's not performance, or you're not a good culture fit. It's easy to sit down and say you're just not hitting those numbers and you're not doing the work, so we can't give you a paycheck anymore, right? And that's a kinder way to get in and out of real estate. Maybe you worked for 3 months and you made $9,000 and didn't sell a house, and you learned that you were no good at real estate. What a great experience for that agent versus going broke. And there was leverage provided to the senior agent.
Dave,
right?
you and I have talked about this, and we've talked with Dorothy and everything, and how remarkable, like you just showed on those charts, her business changed having that showing partner. Are you truly using it as hey, come in here, learn real estate, and then learn it, and then we're going to make you an agent on the team? Or what about the concept of they stay a showing partner? Because I might just come in here and say, hey, this is all I really want to do. I just want 100%. You to give me the properties and I'll go show them,
Yeah, there are. So that is being termed the empire builder inside this mastermind that we have. And there are empire builders who want to just stay there. They go, you know what? Negotiating and graduating sounded great, but not anymore. So that typically now involves a salary plus a bigger bump in commission. So that's somebody who says, okay, you're just going to run with me and you're going to do all of the showings. Now you're going to start writing the contracts. And now you're going to start getting a 10% bump on everything that we do. And then if you bring in your own, it's a 20% bump. And now you have teams across the country that have these empire builders that they're making $130,000, $140,000, and they're super happy.
Right.
And they have no stress on being the agent.
Right.
And so we're offering that. And it's funny, we have somebody in our organization that's very interested in that. Like, okay, because I like being out, I like doing that, but I don't know if I'm cut out to be an agent. Right. And that's a fair assessment. And once people figure that out,
how are you going to make the rain when you go out on your own if you can't figure it out?
Right, exactly. So I think that's amazing. It's basically a buyer's agent at a much lower cost of sale, and you're keeping the clients, right? So 100%. That's how, in my opinion, like Eric and Robbie are writing a book on how to build a perfect blueprint, and I'm on board with it. Like, you can get to 150 closings with no agents on your team. Admin, showing partner,
yep.
And ISA, and you're doing 150 closings, and everybody still gets FaceTime with the Rainmaker, and that is a massive business that will pay for years and years and years. And I think it's the right way to do it.
It's a great concept on a team, and you know, and not worrying necessarily about them leaving because the clients still retain. So
Right.
Dave, can you tell us a little bit about the hiring process around this? You know, I know you shared with us before, but you know, who is out finding these people? Where do you find the people that are interested in this? Who's involved in the interviews? And that, you know, is Dorothy involved, or is it just you? And you're like, hey, Dorothy, here's Amber. She's your new showing partner. How does all that work?
Yeah. So I've learned, don't tell the agent, here's your showing partner. Don't do that.
Yeah.
So we did that one time. Right. So there's a couple of ways to do it. I did get very good traction running ads. I think I had 103 people respond to it. And then with that many people that responded to an ad, we hosted a career night. And I think we had, I don't know, 12 or 13 people come out for a career night. And the career night was just meant to scare them. Like, real estate is so hard, and paint a picture of like this massive famine before the feast, and how 86% of agents fail that. They can't last that. So we really want to under promise and over deliver. Like, this is incredibly tough. You are going to have a tough go at it. It's emotionally draining. Clients are going to be yelling at you. There's so much baggage with it, but there's incredible opportunity, and it's a great industry to serve and love people. So if you don't want to serve and love people, don't get into this. Go do something else. And if you can't handle somebody crying and screaming at you because keys are delayed, then this is a tough business. So we get into that. We walk them through what it looks like, and then we narrowed it down. And then what we did was, I think we had 5 or 6 dinners where we took our top people and we sat down and we did like a 3-hour dinner. And it was basically, it gets you through all of the HR requirements by having them like, Don, just tell me about your life. Start from your first memory to yesterday. And you can find out everything you would want to know about a person that you're not legally allowed to ask. Right. And
especially if you give them
really
a
get
wine before dinner.
And yeah, like, and then I know when I get the bill, I'm like, okay, $25 glasses of wine, maybe they're not a great fit, you know, like could have gone with the $12 glass of wine, right? But you really get to, I think that 3-hour dinner is like 6 months on the job of like, oh, I didn't know that about you. Oh, I didn't know that's how you grew up. God, you know, like, we want their highs and their lows. That's been really good at doing that. And, you know, one thing I looked at, my landscapers are here, so if it's loud, I apologize. One thing I learned is just, I think this position, you can go after people in your own world where you're like, gosh, like Sharon would be amazing at real estate. Like, she's so good at everything else. Like, maybe she wants to do it. And you're like, Sharon, what do you think about a career in real estate? And I know it's not a lot, but what if I put you on a small salary just to start with? Right. And they have people in their ecosystem that were making 75, 80 grand a year. And they're like, okay, I could live on $3 grand a month. And it got in talent that wouldn't normally look at the business because we're commission based. And there's, you know, Eric says there's 5 people who can do commission based. Like, you're a trust fund baby. You have a sugar mama or a sugar daddy. You have a second job. You have super bad spending habits. You're willing to go broke and spend on credit cards, or you have a ton of money in the bank. Those are people who can start commission, and there's not a lot of them, right? And so you can go get somebody who doesn't have to fit those molds and say, can we just get you a little bit of a buffer until you get going? And that has really, that was one of my biggest takeaways this last week at our mastermind, was like, I think I need to start going after people who wouldn't even think real estate, because we now have some security for them. Right. And so that's kind of the process. And then, like Sharon said, you can either become an agent or stay as an empire builder. But I think this is about retention. It's about minimizing our risk with newer agents. It's about higher profitability. And I'll tell you, and Dorothy will tell you, she's had a great 3 months of freedom and her life back. And still, she's going to close 24 houses in 3 months, and she has more time than ever. It's such a gift. It's the win-win-win. It's the best win-win-win I know in real estate. So.
And so so like Dorothy was involved. So I assume Dorothy's at dinner, and Dorothy's like, you know, I really like Sharon. And I would love it if Sharon is interested in joining us. I'd love it if I had the opportunity to have a deeper conversation about Sharon being my showing agent.
100%. So like those 5 people we went to dinner with, we all felt like they were part of the culture, like culture won. And then do they want this job? And then Dorothy had the biggest say in this hire. And I think that's why it's worked so well. And I was like, absolutely, I'm on board. I think she fits our culture. I think she's a great applicant. But ultimately, Dorothy sat down with her one-on-one after I did mine. So that having her or whoever the agent is going to be, you know, and that's where we've seen some of these other teams, that agent goes find their own showing partner where it's like, hey, come do this. Like, this would be great for you.
Right.
So I think the agents, they need to be fit the culture, but the agents need to sign on.
What are you asking from an availability perspective from that person?
Yeah, this was a tough one. I think this is what drove away our first 2 people was we definitely want people to have a life. There's no doubt. But I feel like it's unkind to hire somebody into real estate with the intent of being an agent by giving them a Monday through Friday 9 to 5. I just think we're now being unkind. That's not the expectations. That's part of scaring them is you're going to have planned Saturday and Friday at 7, you're going to get a showing request. And if that's not something you can do, we understand it's just not a job for you, because that's what we've all had to do as the realtors. And we want balance. So let's figure it out. Like, let's take time off when we need it, but it's on our clients' terms, not our terms. And just being very stern about that, to saying if you're expecting structure, then don't do this job, right? So it's been the tough balance. We've had like, I'm always working, I never get time off. And that's not what we're trying to run. And we put it on them, then take your time off as needed. But you know, don't leave an agent high and dry on a Saturday when we book 6 showings and you need to be there. Don't call in sick every week. Yeah. So
well, and you know, it's I think that's all part of that culture. You know, Dave, those people who want to be there, those people who find a way to not be sick, you know, are those people who are typically are people who are the ones who excel, right? Those are the ones who are committed to the success, committed to the job, committed to their agents, and want more for themselves.
Right. And we're showing them the beauty of this is because, right, we started it a year ago. We had some hiccups and some bumps. And now we're showing same agent, same routine, same lead source. We'll do, I mean, she's nearly at 500,000 of gross GCI. And what she has made this year, her income has just skyrocketed. And we're showing, you know, you can make rainmaker money in this model. There are people making 400,000, 500,000, 600,000 in Fargo, North Dakota, of all places, as a agent on the team using this model. So it financially, it's showing them what they're sacrificing for, and it's hard. Go to med school, go be a AAA baseball player before you make it to the Cubs. It's hard. So we're asking you to put in like a 2-year grind, and it's hard, and there's going to be massive reward on the other end of it. Yeah, but that's not going to be for everybody.
Yeah. Dave, thank you so much for your willingness to share and such insight. And we're excited to revisit with you at late December, early January to see how far we've made it past our goals. I was going to make a joke when you were showing your volume numbers, and that you're really right around the corner from being there. So you're just going to shut it down for the rest of the year, I assume.
We're done. Yeah, we're done.
Yeah. I think we can call them in at the beginning of January so we can get the full year.
Yeah.
That way it's final. And like, here's the final.
I love it.
I like that. So, sounds good. Yeah.
Right.
Thanks for letting me share that. Appreciate you guys.
Yeah. Thank you, Dave. All right. So we're going to make a little shift over to Ms. Amber, and she's going to tell us about the cost of money. And, we've been hearing some things about the bond markets. We've been hearing about people trying to push the numbers up on interest rates, the people that aren't the feds. And so what we have going on out there?
Yeah, we are seeing interest rates rise right now. In the last about 4 trading days, we've seen them rise faster than they did last spring when we had some good news in regards to vaccines being released and COVID cases going down. And tomorrow is a really big day because we have an inflation number, the PCE report coming out. And if that shows inflation above expectations, it's likely going to be very ugly for interest rates. And so today we're just kind of holding pretty neutral. We haven't had a lot of movement. We could see some sell-off as we go into the day further and traders get concerned about holding bonds going into tomorrow. But tomorrow will be a really good indicator of what directions our interest rates going to be going. And this isn't even the Fed saying we're tapering yet. This is just continued concern over inflation numbers. So if it comes in higher tomorrow, they will, continue to say, I'm really worried about where this inflation is going. And obviously inflation is the arch enemy of interest rates and it will drive them up. And so we are just talking to all of our clients about locking in. And even though it's not maybe the 2.75% that we had a month ago, it's still like low threes. And that's still an all-time low interest rate. And we have to remember that and be aware of the numbers when we're making these decisions. So as we go into the next Fed meetings and we hear more about the tapering, that's when I think we'll really start to see some jumps up.
So from my understanding, from the last round of Fed meetings, that we were given the impression that tapering is a ways on, that we're probably not going to see it in 2021, and at least through the first quarter of 2022. And correct me if I'm inaccurate, because this is other people's interpretations to me. But then I've also heard that there have been some investors out there who are trying to push the interest rates up, who are dissatisfied with those answers, and that they're trying to do kind of what we've seen with GameStop and some of these other places where they're trying to push numbers in a certain direction by throwing a bunch of money at it. Is that what you're hearing as well, or?
I've heard some of that. I don't know how successful they will be in driving the market with that. I think that it's really going to be just the confidence that the traders have in what's going on with inflation and the value of these bonds, and the communication continued from the Fed in regards to tapering and when they're going to be doing it. I mean, it's kind of that thing where everyone knows it's going to happen, but they just don't really know when. So no one's like really confident in the value of the bonds because of that coming up. And as we get these numbers, right, good news for the economy is going to be bad news for interest rates. We're going to see them rise. We want our economy to get back on track, but that is going to determine how fast interest rates go up. So it'll be interesting to see. I don't think that the rise that we've seen right now has anything to do with those investors that are trying to rise the interest rates. I think it's just the news that's been coming out has been more friendly for stocks and the economy than it has been for bonds.
Gotcha. And then, so the last year when with December when they make their determinations on FHA maxes and conventional maxes, right? That comes in mid-December, goes into effect early January, correct?
Yep.
When those numbers come out. And so last year we had our largest increases in those. Are we? I mean, I don't know how we don't expect at least the same this year. Is there any indicators, any way people can anticipate what we're going to see there?
No, there's not. I wish we had a crystal ball in regards to that, but this is sort of unprecedented, right? Like I've never seen a time where we've had this kind of price appreciation. So I don't know how far they're going to move the needle on those minimum loan amounts, but there hasn't been any sort of like whispers or ideas of where those numbers are going to come in at.
So we should expect that number probably mid-December?
Usually that's that's when we get it.
Yeah, that'll be really interesting to see because, we just have so many people who are kind of, just stuck because they need to be in one of those types of packages, and there's so many limitations around that. And I know on conventional, there's a lot of things that we can do to work around the conventional max, so which are great. And I know you and your team do such a good job of working around that. But people who are in that FHA box, it's a lot tougher to work around.
Yeah, I mean, it is, especially with the rise in prices. I mean, really, you're looking at condo and townhome, and then finding a condo that's FHA approved is, another challenge on top of all the other layers. So getting a rise in the FHA minimum loan amount would really help out some of those entry buyers that want to be in this market.
Yeah, excellent. Well, thank you as always. We appreciate your insight and thank you.
Thank you.
So Mindy, how are you? We're expecting good numbers today, right? No? More inventory?
Listen, I'm going to do my best. All I
Okay.
can tell you, Don, is that we haven't seen much fluctuation over the last couple of weeks. So last week we talked quite a bit about the idea that the market is doing a little bit of stabilizing. It's just stabilizing at a much lower inventory level than we all had hoped. We had seen quite an increase in the amount of inventory from the beginning of the year. So kind of our February, March timeframe, we had about 2,500, less than 3,000 listings available on the market. We now fluctuate somewhere above and below the 8,000 mark. So we go anywhere between 7,200, 7,500. We popped all the way up to about 8,400, 8,500. But we seem to just sort of be moving back and forth around that point without being able to make much of a change. And I don't really think you're going to see too much different than that through the holiday season, because here in Arizona, there certainly isn't a time where real estate ever stops. But the season of our fourth quarter here in Arizona is not typically our largest time for transactions. Doesn't do anything to price. In fact, prices will continue to go up until we have a truly balanced market, which is probably about 25,000 homes on the market versus 8,000 homes on the market. So we still have quite a ways to go. But you're not likely to see a massive increase in inventory come over the next couple of months. And we're probably not going to see too much of a fluctuation from a buyer perspective either. Our buyer demand is actually weakened a little bit from the beginning of the year. And I think that's happening for a couple of reasons, one of which is seasonality. I think this is the first time in a long time that we've had some real seasonality in our marketplace. We have people who are going on vacations. We have people who are in person school. They're having events. We saw all the homecoming pictures from the last week. I mean, these are not conditions that we've had for a while. And so I heard it best described yesterday. You know, if the market was a car and it was going 150 miles an hour, March, April, and May, it's now going 90 miles an hour. So we're certainly not in the slow lane, and there isn't anything that has negatively impacted our market. You just don't have the same feeling of what's happened. We're seeing less offers on properties. We're seeing properties take a little bit longer to sell. We're seeing more price reductions. The primary drivers for our buyers to get back into the market is, one, you have more inventory now than you've had in almost an entire year. So you have more options than you've had. Two, Amber is talking about interest rates going up, which is something that we said we knew would happen, but we really weren't seeing any movement in. So there wasn't a sense of urgency, if you will. Well, now there definitely is. And if you figure light appreciation is maybe 1% to 3% a quarter, if you were to be very conservative in what you might see going forward, you're talking about the potential for a 5% increase come January. So if you take a $400,000 house, you're now talking about a house that's probably going to be $425,000 come January, and then potentially another, call it half a point from an interest rate perspective, which may even be conservative. That could change between those two things, your payment by a couple $100s a month, which is significant for most people. So the impetus for our buyers to get out there is very clear. And the impetus for our sellers to get to the market is that we still have institutional buyers who are buying at great volumes. They're also selling, instead of 1 of 10 of the homes that they put on the market, 1 of 3 back to companies. So that tells you that there is a lot of action and money behind corporate and independent investment firms in Arizona right now. And so as a seller, if demand is not off the chart skyrocketing, you want to sell when you've got normal demand, if you will, primary occupant demand, second home buyer homes on the demand, but you also want this other piece of business, which is your iBuyer and your investment space, because that could change at any time, right? We talk about, one of the things about our market is it's not as volatile as it was at the beginning of the year. We cannot build 20,000 homes overnight. And so much of the volatility in the market has been removed, right? Because of the low inventory situation that we have. But the investment space, that is always a piece of our market that could absolutely change on a dime. So for our sellers to know that they can sell today when they have your regular buyers and your whole investment space buyers, that is the best time that you could get on the market.
Yeah, we're definitely seeing, right, with those institutions and with all of them, we're seeing a lot of activity there. But we never know, because we've seen that 100% turn off before as well. And
that's right.
So, and so Mindy, as far as new listings month over month, what are those numbers looking like that are going to pending? Are we seeing an increase in listings and they're just getting gobbled up equally fast, or are we kind of the same on the new listings?
Yeah, so the pace of new listings coming to the market has not skyrocketed either. They're coming to the market slower than we expected. So if you remember a couple of months ago, we were looking at the rate at which new listings were coming to the market and the rate of demand in the marketplace. And many people expected us to be in a balanced market by the end of the year, which I thought was aggressive at the time. And certainly with the market stabilization of the last month or so, it is unlikely that we will be anywhere near that by the end of the year. I think most people are predicting 2022 to be one of, it's a lot of twos, 2022 to be one of the highest volume transacting years that we've ever had in Arizona real estate. 2021 certainly was one of those. And I think that they expect 2022 to be that as well. So I think, the message for real estate agents also is that you have the potential to get into what could be a very lucrative career if you are willing to work hard. It is a competitive market still, with even just 8,000 listings available on the market. It is a business that requires lead generating or communicating with new clients at all times. It's an active business, and for many of the agents who are in the industry, they haven't had to do a lot of that work before, and that is going to be what it's going to take to succeed. So I think you're going to see a lot of agents doing more business than they've ever done in 2022, and I also think you're going to see a lot of agents doing less business than they've ever done.
I met with a brand new agent on Monday who was asking me about, what have you seen of people who've been successful, and what have you seen with people who have just kind of faded away? And it always comes down to the same things for me, right? That person who's adaptable, that is the person who is the most likely person to be successful. The person who's going to adjust and adapt. If you're going to spend all of your time getting ready, then this is going to be a pretty tough road on you, right? So, and then she asked me about teams, and she wanted to know what my opinion was on joining teams. And, much to what Dave spoke to earlier, and Mindy, you've spoken to many times, I don't know that there's a better training ground to become a real estate agent. And for some people, it's the right place for them to be the rest of their career. For others, they go on to do their other things. But look, you can have a huge business today. If you're willing to spend $10,000 to $15,000 a month, you can have a huge business today. Most of us aren't in the position to do that. And given the fact that we're not in the position to do that, we have teams that have already done all that failing for us, and they figured all the things out and can help you be successful now, and it doesn't cost you the money.
Yeah, I think, and I've said this before, Dave and I certainly spend a lot more than $10,000 to $15,000 a month to run the businesses that we do. And I don't know that people really understand the amount of investment that we make in our people and in our teams. But a team concept really is not a foreign concept to taking care of clients. And I think what happens when people get into real estate, it doesn't have to look like what you think of a team or a solo agent, that those are your only two options. Dave just gave you a model where a solo agent, if you will, could do 150 transactions a year with 2 showing partners and an admin. Is that a team? Of course that's a team. Like, I think so much of this is this mindset when we get into real estate, that the driver really is about being an independent contractor and making your own decisions and choosing how you spend your day. And the true sort of defining piece to me of someone who's going to be successful in real estate is that they're not trying to be an independent contractor, they're trying to be a business owner. And a business owner necessitates partners. And whether that's in a team structure or you create your own team structure, there is no magic. There is no fancy, way of doing things that allows some people to be successful and other people to not. It's the things that Dave showed. It's knowing how many conversations you have to have. It's knowing what your conversion rate is. It's keeping a schedule for yourself and showing up on time for yourself and for your business. It's knowing what you have to do to market yourself. There is no magic. It is hard work. It is a business of caring, like Dave said, and serving for others. And if that's what you're looking to do and you're looking to work at a high level, it does not mean work 24 hours a day. It does not mean don't have a family, don't support your community. Those are not the kind of people that we want to be in business with either. And it's a career. And so I think that next year, there is a lot of money to be made. There is a lot of brand awareness to be had for the people who are doing good for the communities that we serve. And I think it's also hopefully raising the bar in what it takes to be a clinician and a service provider in the real estate space.
Yeah, absolutely. Well, guys, thank you all so much. Mindy, I know we're going to be missing you for the next few weeks. You're going to be out there just getting smarter and be able to bring us even more information in the world. So thank you. But we'll miss you over the next few weeks. But thank you for your time today. Thank you for your update. Amber, enjoy your time away next week. Sharon and I are going to do our best to hold the fort down. And we're not planning on roasting anybody while they're gone. So, we're much kinder and gentler than the folks we had on last week.
I was just going to say that. I'm like, well,
Yeah. So, but
keep it nice, Don. We won't roast her. It's all nice. Or
So, but Amber, we'll see you in a couple of weeks. Mindy, we'll see you in a few weeks. Sharon, thank you for being here today. Dave, we appreciate you so much, and we are so excited to look at the year-end numbers come January. Thank you for your willingness to share and give all the looks behind the curtain of all the things you're doing. So thank you.
It's my pleasure.
Yeah, right, thank you, Dave. Great job.
Yeah.
Thanks, guys.
Thank you, everybody, and we'll see you next week. Bye-bye.
See you guys.
Bye.